Most people believe nations rise or fall based on hard work, innovation, or leadership. But what if the real force deciding their fate is something almost no one can see? An invisible ledger that never forgets, never forgives, and never closes. What if every war, recession, bailout, and boom is quietly recorded in a system designed not to be paid off, but to be perpetually rolled forward? Today's mystery isn't about money you hold, but about money you owe without realizing it, because behind flags, borders, governments, lies a global accounting system that controls nations through perpetual debt. To understand this ledger, we need to step backward. Long before credit cards, digital banking, or even modern nation-states. For most of human history, money was tangible. Gold, silver, grain, and land were the ultimate settlement tools. Debts existed, but they had limits. A king who borrowed too much risked revolt. A lender who pushed too far risked exile or execution. A debt had consequences for both sides. But as trade expanded and empires grew, rulers discovered something dangerous. Debt could be postponed, abstracted, and passed forward. Instead of paying immediately, promises became currency. This shift laid the foundation for a system where obligations mattered more than assets. The true origins of the invisible ledger emerge in early banking centers like Renaissance Italy and later the Bank of England in 1694. Governments realized they could fund wars and expansion not by raising taxes up front, but by borrowing against future income. This was revolutionary. Debt became a tool of statecraft. Creditors were no longer just merchants. They became institutions. Bonds replaced bullion. The key cause and effect change was simple, but profound. Once governments proved they could borrow repeatedly and roll over old debt with new debt, repayment stopped being the goal. Continuation became the objective. As central banking evolved, especially in the 19th and 20th centuries, this system scaled globally. Central banks didn't just manage money, they standardized debt. National currencies became promises backed not by gold alone, but by a government's ability to tax its population indefinitely. The invisible ledger expanded beyond national borders, connecting countries through loans, trade deficits, and reserve currencies. When the gold standard collapsed in the 20th century, especially after 1971, money officially severed its anchor to physical reality. From that moment on, every dollar, pound, or yen was an entry in a ledger balanced by debt somewhere else. The rise of this system accelerated after World War II. Reconstruction required massive borrowing. Institutions like the IMF and World Bank were created to stabilize global finance. But stabilization came with conditions. Loans weren't neutral, they reshaped economies. Countries were encouraged to specialize, borrow in foreign currencies, and integrate into global markets. When growth slowed, they borrowed more. Cause followed effect relentlessly. Debt demanded growth. Growth demanded more debt. The ledger grew thicker, more complex, and harder to escape. Eventually, the breaking point appeared not as a single collapse, but as recurring crises. Latin America in the 1980s, Asia in the 1990s, the global financial crisis in 2008. Each time the story repeated, excessive debt led to instability. Banks and governments intervened. Losses were socialized while the ledger remained intact. Bailouts didn't erase debt, they transferred it. Private obligations became public ones. National balance sheets absorbed the shock, and citizens inherited liabilities they never agreed to. The fallout of this system is subtle but everywhere. Governments prioritize debt servicing over social spending. Inflation quietly reduces the real value of wages while preserving the ledger's integrity. Entire generations are born into economies where growth is mandatory just to stand still. The paradox is cruel. Countries are told they must grow to pay debt, yet growth itself requires more borrowing. The ledger never shrinks. It only changes hands. Over time, fixes were proposed. Austerity, monetary easing, debt restructuring. Each promised relief, but none addressed the core issue. Austerity reduced public services, but preserved creditor confidence. Monetary easing inflated asset prices while deepening inequality. Restructuring delayed payments but rarely reduced principal. These weren't solutions. They were pressure valves designed to keep the system functioning. The invisible ledger remained untouched. When we look at modern parallels, the pattern becomes impossible to ignore. Global debt now exceeds global GDP by multiples. Governments issue bonds, knowing they will never fully repay them. Central banks create money to stabilize markets, then withdraw it when inflation rises, only to repeat the cycle again. Crises are no longer anomalies. They are features. Each shock justifies deeper intervention and tighter integration into the ledger. What makes this system so powerful is not secrecy, but normalization. Debt is framed as responsible. Borrowing is framed as growth. Questioning the system is framed as dangerous. Yet history shows that no debt-based system lasts forever. Empires fall not when they run out of money, but when confidence in the ledger collapses. When creditors doubt repayment, or populations reject the burden, the numbers lose their power. So what does this mean for us now? First, understand that national debt is not like household debt. It is a mechanism of control, shaping policy choices and limiting sovereignty. Second, recognize that crises are not failures of the system, but expressions of how it operates. The ledger requires instability to justify its existence. Third, realize that real wealth has always existed outside the ledger in skills, resilience, productive capacity, and trust between people. The warning is not that collapse is imminent, but that dependence is deepening. The more societies rely on debt to function, the less room they have to choose alternatives. The open-ended question isn't who controls the ledger, but how long people will accept its rules. If money is a promise, and debt is the record of those promises, then the future depends on who is allowed to rewrite the terms. If this changed how you see money, history, and power, make sure to like the video, subscribe for more deep dives into the hidden systems shaping our world. Share this with someone who still thinks debt is just a number.